Flip the page, it's time to start the game. Graham and Nathan calling out the names. Opportunities knocking loud and clear. The market's playbook is finally here. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like the razor blade. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with the hawk side. Options and plays in a live display. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with the hawk side. Options and plays in a live display. Every move counts in the game they play. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, step by step they break it down. No confusion, no spinning around. With every trade they set the tone, making big calls on their trading throne. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that will fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh.
Well, good morning, everyone. Welcome to the Tuesday, October 21st edition of the Opening Playbook. Good morning, Nathan.
Good morning. How's everyone doing this fine Tuesday?
Well, the sun is shining. My eyes are open. I think it's a good start.
It's a good start. Well, everyone, I hope you are doing great. I've got an interesting open, kind of a mixed bag. And we'll talk about a couple things. The thing that I think is kind of crazy is that GDX is down 8.5%, silver down almost 7%. So we're getting some of these back and forth crazy flushes. So for me, these are about as easy of the kind of buy the dip idea as you're going to find. I mentioned in Telegram, frankly, even if it goes down, even if I'm wrong and it goes down, I'll just buy another one. And you know, I think we're in that kind of environment where you can be aggressive. As long as you're aggressive also with your risk management. I think that's really important. Now, I do want to let you guys know about a lesson to keep your eye on. This is something that, you know, I'm well aware of, but sometimes I still make really stupid mistakes. Thankfully, this was just a very small stupid mistake regarding our PM trade. But let me show you what I did. And maybe you guys can learn from my stupidity. So yesterday, we're going to do a little gamble on PM. You can see I only had 2 contracts in there, just to take a little shock because I thought Staples might start outperforming. Which, by the way, if you guys are in the KO trade, Coca-Cola, that's up a little over 200% right now. So maybe take a couple contracts off if you loaded some up for there. But I was going to see if this could even run up into the low 70s and be a monster trade for us. But just a couple $100 here on PM to throw a gamble at yesterday. But what you might notice is my fill time was 9:30 a.m. And 14 seconds because I didn't get filled yesterday, but I had an opening order as a good till canceled order, and then as PM, tanked somewhat. I got filled this morning for an order that I meant to place yesterday, and was down about 85% within 2 seconds of the order opening. So there's a little lesson for you to make sure that when you're doing opening orders, you don't want to do good till canceled orders and let overnight moves absolutely kill you. I think I have only done that a handful of times in my life, but this was one. Thankfully, I'm only going to lose about $200 because of that, idiotic mistake. But maybe it'll help you learn from that as well, and make sure that you're careful about those orders that you leave overnight, because you definitely don't want to, open a position and be down 90% within 10 seconds of an opening. Thankfully, we do have Coca-Cola ripping on the other side. That was our other earnings trade that we put on like kind of a week in advance of earnings, looking for the run there. I think that one is up about 220% on that guy. Meanwhile, PM down 93%, which is about what it was when I opened the position. Now, let's take a look at GDX, because it has absolutely cratered here since the high of 86. I mean, if you look at it on the daily chart, we're still, obviously up. I mean, the chart is just insane. But this is one of those things where I still think we're probably in a squeeze on gold. I think that the cycle here still has a lot of ammunition behind it, and I wouldn't be surprised if GDX continued ripping. However, there is sometimes a situation where when you get toward the top of gold, the miners lead the run up, but then they also lead the settling down. So it's one of those situations where, gold miners are lagging, gold's picking up, miners are lagging. Then it's like, okay, we're in a real run here. The miners catch up, then they way overperform. And then if gold starts lagging again, the miners will come back down and kind of overcorrect back to the downside. Now, I don't think we're there yet. I think gold's got, some horsepower left. So I actually like GDX just as a kind of a premature fill the gap kind of trade here. But if you are a little bit more nervous, you think, listen, gold's still going to rebound and be fine. It's flush, but the gold miners might have already had their melt up. They might be done. Then you could just take the same idea and do it on GLD, because we're also getting a big hit down on GLD. So you could still do the same idea, just trade it on GLD instead of GDX. But I personally think GDX has a little more upside because that gap is just so big. And so I'm going to take a debit spread here using GDX. Here it is. I'm going to give this some time. We're on the daily chart right now. So I'm going to give this, you can see what it's done since the end of July. That's what, 3 months and 2 months and some change. So I'm going to give it a good month or month and a half here. But hopefully we just get one of those rips where we don't even need all that time. And we can do that. See, we can use the monthlies, which should have a little more volume for us. November 21, that's exactly a month. That'll do. And the gap here I'm going to trade is at 80. All right. So we've got all the way up here, 79.80. Should be in the low 20s. It's actually, frankly, a little bit expensive for this trade. I'll try it 25 cents. This should really be, there it goes, 25. This should really be like a 300 to 400% return. So if you can't get filled on this, don't go pay 35 cents for this. It's too aggressive to be paying 35, 40 cents. I'm going to give it to you, and I'm going to recommend not paying more than 25 cents. This would be the buy GDX November 21 $79 call. Sell GDX November 21 $80 call. Debit here is, let's start at, maybe start in the low 20s, but we'll try for 25 or below. I'll throw it out there to you at 22 cents. We'll try. Now, if you want to do the same version on GLD, because you like gold as an underlying better, take the same dates and just kind of trade it back up, into the 395 area, 394, 395. Pay a little bit more because you're not quite as far off as a percentage basis, which is one of the reasons I like GDX. But you could do the same idea here. I'll give you that one as well. 94. And just to be clear, this is one of those trades, and if you read my Telegram, you should already know this. This is one of those trades. I wouldn't be surprised if it just continued, if we got another rip down and, GLD's at 380 right now. If we wake up tomorrow, it's at 375, and we go into next week and it's at 365, wouldn't really shock me. But it's one that I don't mind taking another stab, because I think that the run is not over. I think we're still in a fairly aggressive cycle. And so, this is one that I don't mind, even if I am wrong, taking another stab at it. And maybe having 3 or 4 stabs by the time I get a nice winner. But the net blending out to a positive return. So for example, take a trade this week, it loses. You take a trade next week, it goes down but bounces back. So maybe you break even. You take a trade the third week, that's the one that finally shoots. You make 280% or 300% on that one. Well, if you've got a loser, a break even, and a 300% winner across 3 weeks, I'm okay with that. And so this is one of those, kind of like I did on Bitcoin. Just took a run at 112, took one at 108, took one at 105. If Bitcoin finishes at 113 or 114 2 months from now, which I expect it to be higher, but if it does, I'm still in pretty good position across those 3 trades. So that's one thing. Just be aware. Are you willing to kind of go in, or are you waiting for like a full bottom? Because if you're waiting for a full bottom, I don't think we're at a confident point in that. I'm taking it now because I think based on what we've seen in this crazy buy the dip market, we could wake up tomorrow and gold could be up 3% again. So I'm willing to take it, but I don't think we're at like a solid technical bottom where I'm like, okay, the bottom's in, let's start accumulating. This is more of kind of that stab idea in the middle. So hopefully that makes sense. That's where I'm at on gold. Someone asked why I like GDX better. Just a little more upside, a little more risk to reward on GDX there because the gap was bigger. So I went with GDX, but I don't mind either trade. Hello, Graham.
Hey there. Hey there. Let me go ahead and get my screen up here. Oops. Yeah, I do think gold is awesome. I think it's going to go to 5,200, probably higher over the next year or so. I'm curious, Nate. I just noticed all of these people coming out to make gold predictions all of a sudden.
No way.
Which makes me start to think maybe it's time for a little cool off in gold.
Yeah.
Whenever it starts making headlines and you see ads on Google with somebody's new big prediction on gold. So, typically, a lot of these analysts are late to the party and you can fade them. But hey, we'll see.
Yeah, it wouldn't surprise me. Like I said, I definitely won't be surprised if we get like a true flush here and gold goes down, I don't know, 10 to 15%. But it's just one that I don't mind taking a stab just because of how aggressive these jumps have been. I mean, Friday we talked about that. Gold was up 3% yesterday. Now it's down 4% today. Not usually how I would define how gold trades, but that's the kind of environment that we're in. By the way, we got that Coca-Cola position really ripping up to about 270%. So I did 50 contracts. I'm gonna take off about half of those right now, even though amazingly it is only, Graham, the trade is only worth 20 cents right now on the dollar spread, but we paid about 8 cents. Or actually, I think I paid 6 cents to get into
a $1 spread.
Yeah, I think I paid 6 cents to get into it. So we're up 270%. Oh, 300%.
What strikes you?
272, 273. Or 72. Wow, still looking to go. 72 to 73.
Oh, yeah. Nice.
So the idea was, could it do what Pepsi did? Because Pepsi had a nice big beat, and then it actually ripped again the next week, another, 5%-ish or so. And so if Coca-Cola did that, it would be like a 1,500% winner for us.
Mm-hmm. Awesome.
I just want to say I made 1,500% on Coke. I just want to be able to say that.
All right. Well, we'll go ahead and dive in here. Telegram of the week for you guys. I posted this last week on Apple. Now, I didn't know Apple was going to go absolutely crazy. Yesterday went wild, and today it's up another percent, even with the market slightly down. So I should update a chart. Apple's all the way up here. The options we took up 120%. Let me go see what they look like today. This was from yesterday. 135% now. So hopefully you guys were able to take advantage of that Telegram from last week. If you're not in Telegram, we will post that link here in the chat. Actually, I can't post it because I had to pull my chat up in a separate browser. So if someone wants to throw the Telegram link in there, that would be awesome. It's also below as well.
By the way, Graham, okay, well, there you go. I was going to say, did we mention the trade from Closing Playbook that we got? I got a little flack in the chat for grabbing some Beyond Meat. But hey, Dave texted, so I traded.
That is right. I did too. I tried to post that link. It didn't work for me. Beyond Meat was a Dave pick from yesterday. You guys know we've been trading some Dave picks in the opening closing playbooks. BITF was a hot one. Cypher was a hot one. CLSK was a hot one. Iron was a hot one. Yesterday he texted us BYND, which to me was a little bit odd. Odd. Because I said that's not, he's been giving us these Bitcoin miners turned data centers, which kind of makes sense on why they're going up. Beyond Me, I don't think is going up over the long haul. I think they're pretty much on the verge of bankruptcy. But he said Beyond Meat, and he said this isn't one of his like fundamental picks of buy and hold forever. He said this is a social media viral stock right now. In other words, does anyone here know what going viral means on social media?
I feel like Dave's gone viral many
times. Give me a yes or no.
His day. Yeah, going viral.
Hey, Nathan, on the GLD trade, it looks like the second time he wrote GDX.
Of course I did. There you go.
We'll see. Does anyone know going viral? Got one no, two no's, one yes. Yes.
We got some yeses. All right.
Nate, how do you explain going viral?
Well, going viral, first of all, it's mostly related to social media. I mean, it could, I guess, be in other ways, but mostly social media. It's like where someone, especially someone who's not already famous, creates a video or an image or something like that, and then it starts getting shared by a whole bunch of people, and everyone starts going in, and it kind of creates like a social media bubble of like everyone's talking about this thing. So like when GameStop went big in 2020, that was GameStop going viral. It was just getting all this attention in Reddit and these other social medias, and then people started sharing it, and then pretty soon it went from like some guy posting on Twitter that no one knows to like you're talking about at the golf course with your buddies, like, oh, have you heard about GameStop? And I feel like that's kind of the classic case of going viral.
Yeah. So that's what's going on here. A lot of his picks, every single one of his picks, he's calling them viral stocks. Every single one is going viral, where they're just getting shared like crazy on social media really fast. In this case, I think he said Beyond has a 60% short interest or short float, which is insane. So this one he gave yesterday, I threw some money into it. Just a stock. This is just the shares. This is not options. This is 71% overnight on the shares. Pretty crazy. So I sold this. I took profits here. I told you guys in Telegram. So if you're not in Telegram, make sure you're in there to take your profits here on BYN. I don't know if Dave did or didn't. I just figured, hey, I'm going to book this now because it's not very usual. Stock's up 71% overnight.
Yeah, I mean, the cool thing, we'll try to get you guys more information on doing this because it's been fun. The cool thing for me is that I've honestly never traded stocks like this in my life. I've never traded like, hey, we're going to buy a stock and hope that it shoots up 50%. Like this is a whole different ballgame. These small cap stocks where you're looking for like crazy home run moves. I have never in my life traded a stock and expected to do that, except for maybe when I bought some GameStop shares during that craziness for fun, which I think I broke even on. But this is fun. Like this is a whole new animal. I'm not going to put, my entire portfolio into it, but I'll, put 20 grand into a stock like that and see if, hey, can we get a crazy run on this during the melt up? And I don't know if a lot of people in here are in my boat where like they've never done that before, but it's kind of fun or interesting, or if there's a lot of people who've actually spent a whole bunch of time going through trying to find hot penny stock picks and turn something in. I don't know where people fall on that spectrum, but I have to say, like, I never imagined myself getting a text to buy an 80-cent stock and then throwing 20,000 shares on it. But I mean, after Davis hit as many as he's hit, I find myself kind of getting giddy over it and like, oh, maybe this is the next one, and jumping in.
I know. Yeah, it's fun. It's been fun. And the cool thing is that it is shares. I mean, he'll do options. I typically just do the shares because the stocks are moving so much. But that's nice. I mean, you don't necessarily, it could go to zero overnight, but most of the time you're not going to lose 100% when you're wrong. It might be 10, 20% versus options. They create them a lot faster. Anyways, so that's a fun one. We'll see if we can get Dave in here. Get us a new pick. Someone did post in the chat. He did like BETR as well. BETR is the ticker that he likes as well as Beyond. This is a pretty cool snapshot. There's about 1,000 opening playbook trades that we've given out over the last few weeks, and about 70% of them are up. Just a rough ballpark looking at this. Overall, $1,500 in profit. So getting paid to do this for free for you guys by our trade. So I can't be too upset about that. All right, morning market update. Let's go ahead and get this thing rolling. Markets are slightly down. Actually, let me go take a look and see if they flipped. They flipped flat now. So not a lot of excitement either direction right now. Actually, the 60-minute income trade, which looks at the opening range breakout, was really close to breaking to the upside, then broke to the downside, and right now it's right back in the middle of that range. So just not a lot of direction just yet. The big mover today is obviously, like Nate mentioned earlier, gold broke down 4,100 right now. So it's still above 4,000 an ounce, but a 4% drop on gold is a pretty big drop overnight. As far as economic reports go this week, tomorrow we have jobless claims. Friday is the big report. Friday we have CPI, which is an unusual day to have the CPI report, but I know the government shutdown kind of threw everything off. They had to rejig when they were going to do what. Still probably going to have that issue going forward, but hey, the CPI report is Friday morning, so make sure you have your calendar marked. We'll cover it here in the opening playbook like we always do, but that's going to be a market mover as a key inflation report. Other than that, I mean, these may move the markets, but not nearly as much as CPI will. Next week, we have a GDP preliminary. We also have Fed interest rate decision. It's time is flying. I feel like we just had that meeting not that long ago. But the Fed is expected to cut rates again. We'll see what happens. And I went backwards here. I should have started from the top down. We've got a lot going on. Tuesday, consumer confidence is another market moving report. And the other thing to note about consumer confidence, unlike most of our reports, this one happens during market hours. This is at 10 a.m. It's probably going to jolt the market one direction or the other right at 10 a.m. So keep an eye on that Tuesday. Wednesday, we have Fed interest rate at 2 p.m. during the markets, and then preliminary GDP and PCE in the pre-markets on the following 2 days. So jam-packed week next week. And we also have earnings heating up, which we'll talk about here in a minute. Earnings, really, really picking up steam right now. But first, let's go ahead and look at this. What you're looking at here, and I found this very, very interesting. The S&P 500 averages 11.5% a year since 1950. So 75 years. Over the last 75 years, it's averaged 11% annually. So a really great number. Do you guys know that what the average drop is each and every year in the S&P, or the drawdown from the peaks? I didn't
Average biggest drawdown peak to valley per year?
Yep.
I would say similar, man. Like
13.7%.
Oh, it's right there on the chart.
Yeah, it's right there. I didn't know this, but because I was under the assumption that 10 to 20% drop happens every 3 or 4 years. But the average per year is 13%. So you can see it doesn't happen every year. But look, 18% this year, 8.5% last year, 10% 25, 5, 33. So what this tells me is that even when we do get these big corrections, that a lot of times big, scary fear articles come out. They try and get you to sell your stocks. It is very, very normal to see corrections in the market. Not something to be scared of, something we want to be looking to buy into and put together those dream portfolios sort of things, or those AI basket. Nate, Actually, the AI risk on basket we had the other month sounded like some people were doing pretty good on that.
Yeah, well, I got one email from someone who was up like almost 80 grand just on the GLD calls, just
Oh, wow.
literally on the GLD calls alone. And that doesn't even include the rest of the AI stocks that, I think are mostly up 50-80% on the high risk ones.
Wow. So my point is that anytime we do get these pullbacks, again, we probably see the fear and greed meter go to extreme fear and people freak out and the news go crazy. I think that's almost every single time, at least 80% of the time, a great time to be going, counter trend against the market, against the grain, going long and loading up. So drawdowns are very, very normal in the S&P. All right, here's another fun talking about gold. Here's another fun gold chart here, comparing gold to the rally that happened in the 70s stagflation period. If you map it over, we've done this with like tech stocks during the dot-com bubble and where they are now. This is the same sort of concept, but with gold in the 70s. So when I said gold is going to 5,200, that would be like relatively speaking right here on the chart. This is what gold did back in the 70s. It went absolutely crazy. So if you think we're overheated, overcooked, done with gold, you could be right in the short term. I actually would not be shocked to see something like this. I mean, we saw this just a few months ago, probably 9 months ago with gold, where it kind of went in a choppy range before breaking out again. However, given the macroeconomic environment and the data at hand, I do expect another massive melt up move on gold here over the next 12 months to 5,200, $5,200 an ounce and probably higher. So here's your little overlay map there. I showed you this one last week. I'm going to show you again why we are so bullish on quarter four. There's a lot of reasons. Here's one that came up last week that I thought was fun. Quarter four has always been positive, always meaning 100% of the time. It's been positive after 4 or more S&P 500 new all-time closing highs in October, which we already got this October. So what does that mean? That means quarter four has been, where is it? Anyways, quarter four has always been positive. Here you go. 100% of the time, it's gone higher for quarter four when we get those new all-time highs. This one goes towards that viral stocks kind of concept that we were talking about earlier. I saw this chart.
Dude, this is a crazy chart. This is insane.
Floating around the internet. This blue line here is the S&P 500. So over the last 5 years, the S&P 500 is up almost 100%, right? It's since this is COVID, when COVID happened, to give you an idea. Bear market right here. Here's where we are now, up 100%. This pink line here, however, is the highly shorted stocks. So it's a mixed bag between like junk stocks, like probably GameStop, Beyond Meat, like stocks that just aren't that great. The Bitcoin miners are heavily shorted. Even Tesla's heavily shorted. It's one of the highest shorted large cap stocks out there. So this pink line is if you just buy highly shorted stocks. In that same time period, a basket of highly shorted stocks is up 400%. Keep in mind, we're not just talking about like junk stocks like GameStop. We're talking about the Teslas of the world.
Tesla, yeah.
A lot of the tech stocks right now. A lot of the quantum computing stocks were highly shorted. These are they can be explosive stocks. The thing is, when they do turn viral, we kind of see that massive, almost waterfall effect of the hedge funds that are short now having to buy, which adds fuel to the fire. So this was shocking to me. If you showed me this in 2020, back when GameStop was going crazy, I would have said, yeah, it's just a fad. It's not going to last. This is lasting much, much longer than past the COVID craziness.
Do you think it speaks to something we've seen just with the institutions kind of losing their edge in recent years, like how institutions almost completely missed buying the dip while retail traders made out in 2025 and different things like that? It seems like there's a real, changing of the guard, if you will. And obviously the short interest is almost exclusively held by institutions, not me and you out there holding big short interest on stocks.
I do. And I do also think it's that rise in social media, that concept of going viral, because in the past, if you and me wanted to do this on Opening Playbook and talk about Beyond Meat, we've got 500, 600 people here. Yep. We might be able to get it to move 2 or 3% if we really teamed up and everybody went all in here. We don't have a ton of money together, but when someone goes on Reddit or YouTube or Twitch and gets a million people to go buy all the stock at the same time, well, that's when the hedge funds actually lose their advantage. It's a game of numbers right now, and when you get enough people, enough peasants with the pitchforks, if you will, you can actually outnumber these hedge funds and really, kind of hose them, twist their arm, and make it work in your favor. So we'll see. We'll see how this continues to play out. I don't think. I think hedge funds are still under the impression that the what's worked in the last 20 years for them is going to continue to work, and right now it's just a tough time period. They got to stick with it. But I do think the tides are turning a bit here, because we are getting this phenomenon where multiple millions of people can all do the same thing at the same time with these viral stocks, versus just telling a couple friends and hoping for the best.
Yep.
All right, I showed you that chart of gold overlaid with the gold from the 70s. We're going to look here again at our little update of tech stocks overlaid with tech stocks right now. So this is a NASDAQ looking at the 1990s through the peak of the dot-com boom. That's that blue line, and it went absolutely crazy. You can't even imagine like this happening right now. Did you imagine the NASDAQ going up 500% from here?
I mean, people feel like it's happening right now, but compared to what that actually looks like is a whole different animal.
Yeah, it's crazy. With that said, so we say we get all the news articles of this is the dot-com boom all over again. We're about to implode. Blah 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 blah. Could be right. Guys, typically though, when the Fed is cutting interest rates and markets are healthy, economic is healthy, and there's tons of money out there, markets don't like to go down. That's called swimming against the tide and fighting the money supply. Probably not going to happen. Now, there's going to be hills and valleys along the way, but I do think we've got an awesome melt up coming our way. Now, do I think we're going to go up 500% from here? I personally don't. I don't even think I can wrap my head around that. But if you look at this chart here, could we go up from here to here? Yes, we could. That's what, a 30, 40, 50% return from here. Very, very reasonable here as we enter this melt up phase of the market. All right, earnings season is here. Big time. We've got a full chart here today. Last week we had a little bit on, and the week before we had basically nothing. But the big earnings is back today after the close. We're going to start with the first mega cap, Netflix, reporting after the close today. We also have ISRG right here. This is a ticker we haven't traded in probably 6 months or so, maybe a bit longer. This is one that was a really, really good stock. In fact, over the long haul, it's a very, very powerful stock. Let me go ahead and pull up I'm going to go out of full screen. Let me go ahead and pull up my,
by the way, if any of you guys want us to do some Netflix live trading on Closing Playbook, just shoot us a yes in the chat. I'll try to do a little data pulling too, Graham, using your tools, of course, but try to get us a little head start on planning for Netflix. I'm excited to be back in earnings mode here. It makes Closing Playbook a little more fiery with some good earnings.
Yeah, it definitely does. It makes it fun. It looks like the earnings is out already on ISRG. So maybe ignore my point. Either way, look at this stock. It was a beast of a stock. Broke the 50-day. This was back in the April, March tariff scare. Started going back up, but has since gone straight down. So this is one just to have on your watch list. If we get a break above the 50-day moving average at some point on this stock, it's a very, very good, strong stock that should do well in this new age of AI and robotics on the healthcare side. Anyways, that's just a fun little nugget for you guys. Later this week, we also have Tesla on Wednesday. So, Nate, maybe we can do the same thing for Tesla.
Absolutely.
IBM. We also have American Airlines, Intel, a lot of big names coming up, Ford coming up. So it'll be a jam-packed week. Nate, I would love to start putting that data to work if we have the Intel working for us, ready to rock and roll. Did you end up taking a trade on GE yesterday?
No, I didn't take GE. I actually didn't take anything because even my PM trade didn't fill until this morning, which ended up lovely.
I got you. No worries. I was going to say, because yesterday we said GE typically does not make the market maker move on earnings, and today it's only up 0.5%.
Yeah, we should have done the premium roll on that. As far as I know, I mean, maybe you could correct me. I don't think we've lost one of the premium based trades on earnings in Closing Playbook, at least not during the last couple that I remember. We picked some of these that have big expected moves that we don't necessarily see it, And those have been some of our best trades. So that might end up being the direction we go with Netflix too, depending on some data we can pull between now and closing Playbook.
Yeah. All right, last class on Tuesday last week, a week ago. We had that big flash sell-off on Friday, popped higher on Monday, and I said, I'm buying this dip. We talked about this before. A few months ago, I was saying, we got seasonality pulling against us. But the data going bullish was that this bull market run is still very young, still very early, about half the length of what it usually is before a 6% or greater drop. So when we get a 2-3% sell-off, it's a buy the dip opportunity. What came next? Markets bought the dip, hedge funds, whatever, institutions, everybody bought the dip. We're not back to all-time highs yet. We have not clipped all-time highs, but we're very, very close. Now, this may be a period of choppiness where we see another test of the 50 and again before going higher. However, I'm still very, very bullish right now. I would be sort of shocked to see us break well below the 50-day moving average. If I were to draw the 100-day moving average, it would be right about here. If we were to break, I would be shocked to see us break below that line before end of year. I do not think that's going to happen. I think we're going to see it buy the dip over and over again here through the rest of quarter four. So where do we go from here? This was the fear and greed index last night. Let me go take a look at it now. It's even lower now. It's down to 29 now. To me, I put a note here. Obviously, this is still crazy to me, guys. We are within a few ticks of all-time highs on the market. And the sentiment is fear. People are scared. People are worried. Could it be the government shutdown? Maybe. Could it be the tariffs and China trade war coming back up? Maybe. Not too sure. However, the market's very, very healthy. The money flow, money supply is looking very, very strong. Yet the markets are in fear mode. This tells me that we are holding very strong without the foot on the gas pedal. So right now we're coasting on the gas pedal, but the markets are still holding up. Ideally, when we're coasting on the gas pedal, you think the markets would be going down. That should give you an idea of just how strong this momentum is right now. When that gas pedal gets pushed down again, things could really get cooking really hot. Let me go to the next slide. Same story here. Put to call ratio. We look at this every single week. We saw it snap here August 6th, right below our line. That's a profit-taking line. And if anyone knows, let's see, the markets peaked on October 9th. So 3 days later, the markets hit their peaks, then sold off pretty hard. Now we're bouncing back nicely. However, put to call ratio is not in the middle. It's still leaning towards the bear side. In other words, the foot off the gas pedal side. So right now, again, this is just telling us the same thing. Foot is off the gas pedal. Markets are still holding strong. Markets are actually still kind of heading higher right now. So when this gas pedal gets pushed back down, a lot of good things can happen. I haven't looked at this one and I haven't showed it to you in a while. The percentage of stocks above the 50-day or 200-day moving average and 50-day moving average. But you can see here we're just trending up nicely here on this data point. You like to see it between 60 and 70 range. This is going to tell us the same story. We fell out of that 60% range. This means less than 55% of stocks are above their 200-day moving average. This again tells me that the rest of the market is just taking a cool off right now. The broad market, slight cool off, but this number should return back to 60 to 70 range, which would carry up the rest of the market. All this to say is like we are actually not overcooked still. Overcooked is when you get above 70 on this number. So you can see we've touched it a few times, and we probably had some pullbacks if I showed them corresponding. But after this is March and April. So this is a 3-year view. We have not made it back above 70 yet. So this bull run is still early. Same thing for here. Stocks above their 50-day moving average. This is actually downtrending right here, which is pretty crazy to me. To see that stocks, you would think that as the market's been going higher and higher, I mean, June, July, August, September were all great months. You expect June, July, August, September to be kind of going higher and higher, but it's actually been tailing off. So we'll keep this in mind and we'll try and dive into it a little bit more here as the weeks progress. If this number keeps going down, if this goes down, if this goes down and the S&P keeps going higher, what that means is it's mostly the mega caps dragging up the market versus the whole broad market dragging up the market. So we'd ideally like to see it. Let me see if I can find maybe more like this, where everything's trending higher out of pullbacks, not trending down while the markets are moving higher. Seasonally speaking, you guys know this by now. Q4 very bullish. Presidential cycle very, very bullish for us. I can't believe we're already almost through October. I was doing this. I was updating my line here, which is broken out of the chart. I was updating it. And I was thinking to myself, like, oh, we're like here early October. And then I was looking at the date and I'm like, wow, October is already almost over, which is crazy. It's been a fun time, fun year, but it's flown by. Upcoming prediction for you guys. We're just going to maintain this bullish trend. Again, we could come back. We could see some chop here. We could come back, hit the 50-day, chop around a bit. But again, the foot is not on the gas pedal right now. We looked at the fear and greed. We look at the CPC. The foot is not on the gas pedal, but the markets are holding strong. To me, that means the bulls are going to continue to be in control in the medium-sized term, 1 month, 2 months, 3 months out, looking very, very, very bullish for the markets, even if we get a test back at the 50-day moving average a couple of times here. Sector view, again, you guys should know this by now. October is very bullish. We love tech. Financials typically are bullish. Staples are typically bullish in healthcare. Right now, tech is still my favorite. So if we look at the breakdown from last class, here's what we had in our bucket. This week, notable shift. Bitcoin moved down, a couple of other exchanges, but nothing too crazy here. So for the top sectors this week, we're going to maintain our same crew, same bag of the sectors that we like. XLK, again, technology is typically the strongest in October. Funny enough, XLK is the strongest right now. So that's our favorite sector at the moment. Still loving communications. I like utility. I still love industrials. And healthcare, again, is sneakily gaining some strength. Let's go ahead and jump into the nitty-gritty here, which just means let's go get some trades on the board. We're going to start here with the Apex top signal of the week, and I'm going to pull this up. Oh, man, I just looked at the next slide. All right, I'm going to pull this up in real time for you guys so that we can trade it together. Again, if you have the Apex software, best entries come on Friday. That's going to be the most valid entry signal for you is to wait till Friday. However, if you don't have Apex, we'll just do one for free in here. Of course, there's a couple of active signals for you Apex traders. With that said, I do want to take a look at AVGO here and see what's going on because I accidentally skipped ahead. But AVGO is about to enter a seasonally bullish period for us. Just so happens that AVGO is also an Apex entry right now. But it looks like the entry came a few weeks back, and it's been chugging sideways since then. So it's kind of been dragging, especially when you consider that an average time to target or stop is 32 days. We are just slightly outside of that range. So I don't think this would be as high conviction on the Apex entering this late into the game. But let's go ahead and take a look at some others and see what we got going on here. Bitcoin was a more recent one. We've got a Bitcoin trade open. Maybe I'll do another one since we do have a slight 0.5% dip in Bitcoin today. Let's look at Lilly. Healthcare has been heating up for us. I like Lilly. I know this one from experience. This one's a bit longer hold time. So even though we're a couple weeks late, this is very, very normal for Eli Lilly. Awesome win rate, 86% win rate. Let me know. Do I need to blow this up a little bit? Is it small on the screen? Or is it okay to see?
No, you're good.
Okay, cool. The Apex our software does all the back testing for you, which is really cool. So you can see past trades. Let's go ahead and take a look here at Eli Lilly for our Apex software trade of the day. So again, this is going to pull the information for us. Makes it way easier for me to copy and paste in the chat. Again, the ticker is Lilly on Apex. We're going to buy the 16th of January. Notice, yes, 16th of January expiration. That's a ton of time, but that's within the average move for this ticker. And it's going to give it all of that time. Man, this is a really sweet play. It's at 8:00. So Eli Lilly is at 8:07 right now. I'll pull this up here. 8:07. It's an Apex entry, which has worked 86% of the time. It's going to give us, I need to put more time up here. Even more time than this for Eli Lilly to get above my crosshairs. You guys see my crosshairs? I'm going to go ahead and pull the max target one next for us. Oh, wow. Eddie says Beyond just showed up on Alex Scanner with 69,000 call options. Sorry I just read the chat. That's pretty big time. All right, let me get through Lilly here, and then we'll go look at that. All right, so Apex, high accuracy trade here. 810 is our number for the wrap order. If it's above 810 by 116, you're you're going to make 98% return on investment. So I'm going to go ahead and I got to move back to this. All right. I'm going to go ahead and take a look at this one. 16th of January. I'm going to wrap it here. Holy cow. Nate, if you want to buy the January call options on Lily.
Yeah, I don't want to know.
I don't know. Can you guys see? I'll make this a little bit bigger for you guys. If you guys wanted to just buy the call options and don't want to trade the spread, it's $6,200 for one contract. I'm going to trade the spread for $500. If I'm right, I double my money. Filled right away at $5. I actually might get a few of those because I know seasonally healthcare is very hot and it's heating up right now. Keep in mind, though, for any of you who don't like earnings, this does go through earnings. Earnings are coming up in 9 days. With that said, it's about a 3-month play. So there was going to be an earnings period throughout that at some point regardless. All right. Let's go ahead and pull the max profit, max ROI spread as well and see what the data looks like here. So this one is going out of the money to use that target price. Target price is 8. Let's make this a little bigger. Target price is 868 on Eli Lilly. Again, it's hit that 86% of the time. So what we're going to do here is you just slide it a bit out of the money to go for a slightly bigger ROI. Now, me personally, I mean, that's about a 5% move on Eli Lilly from here. Definitely doable, but I'd like to see a little bit more than 138% return on investment. I'll give this one to you guys, but I'm just going to stick with the wrap order for now, just because it's a much, much easier trade to hit, and you're still making 100% return on investment if you're right. So there you go for Eli Lilly on the Apex. All right, next up here, we're going to look at the On the Clock Stocks dashboard pick of the week. Again, that dashboard should be live in the next 24 to 48 hours. I know I told you to either be ready Friday or sometime this week. Very, very excited for you guys. We're going to be able to do a lot with this data. Right now, it's not ready yet, though, so I can't show it to you. But hopefully this time next week, I'll be showing it off in here. With that said, AVGO, Broadcom, chip stock, very, very strong trend is entering a bullish seasonal window where it's gone up over the next 19 days, 100% of the time over the last decade. So the entry date was technically yesterday. I'm not sure where AVGO is trading quite yet today. Let me see if I can pull that up. Hopefully down. Yeah, slightly down. That makes it easy for us. So again, we're going to look about 18 days from today. We don't have to worry about earnings. 18 days from today, that puts us on November 9th. So we're just going to pick an expiration near November 9th. We have the 7th or 14th. I'm going to go ahead and do the 14th. It'll give us just a little bit more time here. And let me check the wrap order price on AVGO, and I'll type it up for you. All right, I would use a limit order here at 250. Whoops, let me do this. All right. AVGO seasonal pick wrap order. Sorry, I'm typing this up. I'm going to buy the 14th of November expiration 340 call. I'm going to sell the 14th of November 345 call. I'm going to set my limit price at 250 because I want to get right in the middle of those strike prices because that gives me a chance to double my money. So again, I'm risking $250 to make $250. It's 1-1 to risk or reward to show you visually. If we'll see if it fills. If it doesn't, you can always just slightly adjust it higher. But basically, we're going to give AVGO all of this time to get above my crosshairs. What I did, 345 right here. So you guys see my crosshairs. Again, that's the beauty of the wrap order. We're giving this stock, which is seasonally bullish. It's gone up 100% of the time during this window. We're giving it a couple of weeks to just trickle about 1% higher. If it gains about 1% from here over the next few weeks, you double your money. Now, next up, what I'm going to do is I'm going to go slightly out of the money. Let me look at the data. Again, the dashboard's going to do this all automated, just like the Apex software did. Made it very easy for us. But let's go ahead and take a look here. It averages a 6% gain during this time frame. 6% here would be about $18, $20 on the stock. That would put it at 360. Let's go ahead and take a look at those options and see what we can get. This is a out of the money trade, debit spread here. It's what I like to kind of refer to as one of the lotto picks. We did this one on Tesla, and it was a massive, massive hit. Now, keep in mind, you're not going to have a high win rate with this, but if you're going to hit 50% of these trades, you're going to absolutely crush it. Wrap order shown in members, guys. Wrap order shown in members. The wrap order training should be in the members area as well as these picks. The $1 opening playbook, yes. If that's your question, Gina. All right, I'm gonna go lotto pick here. And I say lotto, it's really not. Maybe I need to figure out a new name here because it's not like you're buying a scratch off where you've got a 5% chance of winning. I would say you have about a 50% chance of hitting this one on AVGO. And if you're right, you're going to make about 178% return on investment. So if you can do some quick math and run the odds there, you know that's a winning proposition. When your underlying strategy calls for a big move and you go slightly out of the money, you can hit some sweet, sweet results over time. So if you guys have any other ideas of what to call instead of a lotto, I'm all ears. Because I don't want to give the vibe that it's just a scratch off or a Powerball ticket that you're never going to win. Coin flip trade. Dan Spicy.
Spicy. I like it.
All right. Next up, we're going to go look at Newton. The old Newton long scanner right here. See what we got on tap for today. A lot of stocks. Obviously, GM had earnings. A lot of these will be earnings names. Ford has earnings tomorrow. Mana, Target, Mohawk. Discretionary stock. Discretionary team. Oh, they've got earnings too. This is the issue we had a few months ago where I was trying to get us some, what is this, a staple? Oh, industrial. I like FedEx. It's a boring one. FedEx just flipped positive on Newton. Let's see what it looks like on a weekly. It's flipped positive on a weekly as well. This one I might take just a lateral income style play on FedEx. So let me just type this one in the chat for you. This one we can look back to. Oh, GE. Just had earnings. Didn't really move. That's a beautiful stock. They've got earnings. I'm going to make sure I get some liquid ones here too so we can do the options. So I'm just flipping through and trying to avoid any with any immediate earnings. Probably not going to get the volume there to trade that one. Oh, ISRG actually flipped positive. That's the one I mentioned earlier. I'm guessing the weekly will not be positive. Yeah. But the daily on Newton just flipped positive for the first time in a long while. So that's just an interesting note for you. A lot of earnings names. I like GE. I like FDX. Oh, BAC, Bank of America. Very good stock. We know we like financials as well. That's a great looking one, HCA, but they've got earnings. All right, well, we've got a nice little list there. Let's go ahead and take a trade here. So my list here for you guys is FDX, GE, and BAC. Nate, would your income machine work to pull some income trades for us on these?
Of course. That's what I'm here for, Graham.
Do you want to do that? It'll save me the headache of going and clicking through them and hoping for the best.
Yeah, now, I mean, obviously not every stock will qualify for an income machine trade, but we can certainly
you know what we should do?
Certainly check them out.
Why don't we run those three and only take the ones that qualify?
All right, let's take a look.
And then if none qualify, I guess you just kick me off the show today.
Yeah. All right, you want to give me the names and I'll share my screen and we can.
Let's start with FDX. Sean says you sound really excited. I can hear the sarcasm in Sean's voice. I probably just
you know what? Actually, Graham, it's 10:50. Can I let you do this and bail on you for 10 minutes?
Oh yeah, as long as I can take.
I didn't realize it was 10:50 already. You can take full credit. You can say that you invented the income machine. Yes. Well, I have to run because, as people know, my wife has deserted me on her anniversary. No, I really should stop making jokes about her. It's getting out of hand. Wow. No, but she's out of town, so I have the kids.
We didn't even get to hear the rest of that, huh? Kids are probably screaming. All right. Yeah.
What he was trying to say was that no, I can't. I don't even have a joke. I thought I'd have something by the end of the sentence, and I let myself and everybody down. Sorry.
Yeah. So Sean could read the writing on the wall there. He said, "It sounds really excited. Hope you're okay." I'm guessing he's got a little extra stress today.
Yeah, yeah.
Yeah.
Well,
All
when
right.
you have an entire, like football team, and the coach leaves, you gotta
That's
jump
tough.
in.
All right. FTX, first one here that we liked. Hey, look at this. Income Machine, which obviously you guys know is Nate's. Excellent quality. That's great. Thank you. 4 of the 5 have been met. 4 of the 5 criteria. Let's go look at some positions here that we could take. I'm going to go aggressive. Oh, no. Oh, no, 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 none. So look through the options for us. It's just going to say nothing really great to trade here on FDX right now. I'm guessing, yeah, probably just because the lower volume. Look how wide those.
Yeah, it's disappointing when that happens, but I try and remind myself that it just saved me a whole bunch of wasted effort trying to look through the options chain to find nothing that actually has value.
Right. Let me see if I can get one to fill. Yeah, that's just no good there. That's just so wide. That's over the 250. So that makes sense why it wouldn't show. All right. Well, we'll go to the next one. Well, the good news is FDX was a good pick, it said. So just a fun note. Let's do GE next. Good quality. Gives us 3 out of 5 here. Let's go ahead and see if we can pull some income machine options for us. I've got my fingers crossed. I would think GE. Oh, none here either.
Wow. Maybe with just the way the market's bouncing up and down, the value just isn't
It could be.
there.
Oh, look. Okay. Now we're feeling good. Now we're feeling good. Excellent quality here on Bank of America. 4 or 5 met. Talk to us. Talk to us here, Income Machine. This could be our one.
To me, Goose.
Larry says, I wish you guys would stop just talking something to fill the time. Larry, as much as I would love to say I am, I'm really not. I'm doing my best here to try and find you trades, Larry. If you don't enjoy it, you're happy. I invite you to go check out one of the other shows. Maybe Nate and I don't do it for you. That's fine. Aggressive income. You guys know I like the aggressive style. Target income, 46%. That's really awesome. So we can see here, Bank of America can drop over 1% and still pay us very nicely. 46% here, even if Bank of America drops. Now, I haven't used this in a minute. So let me, trade construction right here.
Yep. The only thing is it doesn't give you like the expirations above. So you kind of need to grab the expiration from the top.
Gotcha. All right. Here is our income machine trade on Bank of America. Oh, no. Let me see if I can get this. Formatting a little bit better, easier for you to read because of BAC Trade Construction. Here we go. So we're going to be buying. This is the 7th of November expiration. So we're going to buy the 50 call and sell the 52 call. This is going to be slightly in the money. So we're using Newton here to give us a high momentum pick, but we're still going to go slightly in the money. Use those income machine options here. So that BAC could be flat from here, could fall 13 cents, and it's still going to pay us quite nice. And it looks like the mid price may feel us a little bit lower than what income machine suggested. Yep, filled at 135. So we're actually getting a bit better ROI on that trade. 48% on Bank of America here. Again, I picked the different expiration. That's me talking and traded. Let me pick. Income machine was right. 130. Well, 136. We'll see if we can get that one. I'll throw it in there. So I got the 14th and I'll do the 7th. I don't think either is going to be bad. But again, this kind of actually shows you the line in the sand right there. As long as Bank of America trends higher, which we know Newton, stocks tend to go higher when momentum's above average. Whoa, Linda. That is awesome. Linda says I went from 25K to 40K with these guys in 3 months. Love it. Bank of America here, we're using that momentum play, but also just going slightly in the money to get a little bit safer play. With that said, I'm going to throw you guys a wrap order in the chat too, just because I like him. The reason I wanted to avoid the wrap order at first is just this is a stock under $100, but it does have 50-cent options. But oh, that's perfect. Let me go ahead and type this up for you guys. This is a wrap order. So if you want to go for a tighter expiration and go for a 100% move, I'm going to do this as well. Again, feel free to widen those strikes if you don't like the 50-cent strikes, because the contract fees can get pretty expensive because you have to buy a whole bunch of them. But using the 31st of October expiration, I'm going to buy the 52 call. I'm going to sell the 52.5 call. I'm going to set a limit debit price at 25 cents. Right now it's showing 26. It was just showing. Oh, did that post?
Yep.
Okay, cool. I was having some issues with the chat. Let me get back in it. It was doing that repeat thing for me.
Repeat.
There we go. I'm going to set my limit at 25 cents just because I don't want to hamper my risk to reward here. So again, I'm risking $250 to make $250. I'm doing 10 contracts. The reason I said you may want to widen your strikes is, look at this. My contract fees here, $8. So it's going to eat into my profitability a bit. So if you wanted to, you go 52 and 53. It's going to make it so you only have to buy half the amount of contracts, but you're going to need a slightly bigger move. So trading stocks under $100 with the wrap can be a little bit challenging sometimes. Now, with that said, we did have someone post here in the chat, and I haven't looked at this. Beyond Meat just hit Alex's scanner a few minutes ago. I don't know what time you posted it, but a few minutes ago, you were mentioning that it hit Alex's free ride scanner, 69,000 call options. The really, really interesting thing about that to me is that that's not 1,000 contracts. That's not 2,000 contracts. That's 69,000 contracts, which means the market maker that sold those contracts is now liable for nearly 7 million shares of Beyond Meat. 7 million shares. And if you've been paying attention this week, you know that they like to buy a portion of those shares right away, especially on a stock like this, which has high squeeze potential, where it could get away from them really, really fast. This is like PTSD GameStop for them right now. So, Dave, if you don't mind, as we wrap up today, let's go ahead and pull up that class with Alex, what we did just this week, guys, walking through the free ride scanner, how you can spot these large options orders in real time and what they mean for what could happen to the stock. As you'll see, it means that what's going to happen here on Beyond Meat is the market maker who sold those is going to be forced to buy shares. They're forced to buy a lot of shares. We're seeing this thing tick higher right now. It could be the market maker literally buying it as we speak, pushing it higher. Now, Alex is giving the scanner away for free today. So whoever posted in the chat, you may have the free version of the scanner, which does everything the paid version does. He's doing it for a short period of time. So make sure to stick around, listen up, and grab Alex's scanner right now. We develop tools and strategies, software to the best of our ability. Nobody can guarantee the future. There's always a risk of loss when trading, and past performance is not indicative of future results. With that said, you're going to see some examples tonight. You're going to see a ton of examples. Each and every example is from live trades. We're not going to show you back-tested curve fit data here. Live trades that were shared with folks just like you. A lot of you guys here right now that were in the beta test or Telegram. Guys, get this. From July through October, the win rate, this was on nearly 100 signals. It may have been, I don't know the exact number, but we're pretty darn close. 85% win rate on live trades, 43% average winner, 26% average return over a one-day average hold time. Of course, there's bigger winners, smaller winners, there's losers too, but this is really, really